All right, we're going to go ahead and get started. We're at 4:30, so we'll get some late comers, some people that are online are watching. So being ex-military, punctuality, your time, my time, starting on time is important. And so thank you, Kate. Can you hear me and see my screen? Okay. And we'll check that, see if
Yes.
maybe. All right, cool. All right. So, before we get started, the one thing I wanted to say is that October is financial planning month. And I for the last couple of weeks I've announced that, basically, for me to build out a full financial plan for somebody, normally we can charge somewhere between 1,500, depending on somebody's complexities, up to 3,000. Like anything, if you want to get to a destination, you need to plan. And there's a lot of documents that can do this to help us to get it. And it is burdensome and it is a chore, and we get it. The reason I do this is because it's so important that we understand that, the 401k that we have at work, maybe the IRA I have sitting there, or maybe I have two or three old 401ks. I mean, the complexities as you start to get through your 60s and to your 70s of, oh, what are RMDs? They changed the rules, but how's Medicaid or Medicare affect my income? And do I need health insurance? I mean, there are so many nuances that it really can become overwhelming, and then human nature starts to take hold, and we say, yeah, yeah, I'll worry about it later. And then we don't do anything. I really do feel it's critically important for folks to review their finances every 3 years, just to make sure that they're moving in the direction that they want to. So if this is too much work for some folks, I've just picked up a new software that is more holistic and more general, and it's more off the top of your head, which can, at least at a bare minimum, it can help you to get your financial house organized, right? It's called Asset Map. It is really easy. If you take your phone and you click on this, it'll bring you to a URL that you're going to be unique to you. You're not putting in any sensitive data. And then it'll come to me and we can talk about it. We can schedule a time to discuss. And it will help you to sort of look at, okay, I have income coming from here. I have these assets here. And then, hey, how am I looking for both you and, if you're married, your spouse? So it really does sort of help you to just have on a sheet of paper, this is where everything is. And should something happen to one or the other, right? Your spouse, children can look at and have an idea. So again, I strongly encourage folks to take care of this, to look at it, review it, and this is a way for us to be able to help you to, again, be financially organized. So now to our topic at hand, which is, our Monday, our October rear view mirror look back for the month of September. So we call it, a market update for October, but it is actually for the month of September. And these first two slides are for equities. So the equities for the month of September did well. The markets are at all-time highs again today. Things are doing okay. So into October, this continued the trend. So I'm not going to spend a lot of time on the monthly as much as I wanted to on the annual year to date. And this is why, you need to be in the market. You need to have some exposure to equities. But if you look here, you can see even between July, right after the July of 24, there was a sell-off, right? Markets got spooked, right? And so this is where markets are going to go up. They're going to go down. We are going to have, we all want to make money. I want you to make money, and we need to do so in a thoughtful process. So quite often, folks will take the approach and they'll throw darts at the dartboard. I actually just ran across somebody that basically had about 10 stocks, and it's just not diversified, right? It's like, I know you're in love with Nvidia. right? God bless you. Have a bunch of it, but it cannot be your only holding. And that's why we like ETFs because they're exchange traded funds, they're diversified, and then there are different ways to invest in this broad scope, sort of upward trending components without the added risk of having all of our eggs in one basket. So again, we see here that the S&P just crushed it, right? So the green here, and then we have Europe, which is sort of teal green there, and then purple is the Dow. And then we get into some, but everything is up. The only thing that was a little bit of a laggard there, commodities, but for the most part, this just tells me that right now, with all the noise that's in the marketplace, that the market is healthy. And that is what a lot of the economy is. So in the beginning of the year, I was issuing caution and pause, but it didn't mean upset the apple cart. It just meant, hey, listen, just keep our wits about us, and being, hey, listen, what do I think's going on? We're 19 days away from an election. Then after that happens, we'll see. But most economists, regardless of who wins the office, right? I think most economists are still saying that things should be okay, at least into the first, second quarter of 2025. So that is good news, bar something happen unforeseen. I mean, there was great news today that a Hamas leader was reportedly killed. So, I think that all these things, and it is news, but we do have China, sort of rattling their saber. They are very interested in securing Taiwan. You have Iran, who is actually starting to puff out their chest. And so things could, I mean, a match could spark it right now. So, we were in a time of peace and now we're not. Things change. And so I just say, hey, listen, bar, political noise, when we look at the financial sectors, things seem to be doing okay. They're not great because inflation is there. That's the one thing that we have to always remember, is that things cost more. And even though our 401ks and our statements are saying, hey, we're worth more, but we're spending more on gas. And when we go to the grocery store, when we're buying homes, right now, as we're trying just to live life as an individual, there's still some risks there, and not necessarily political or geopolitical. So, don't panic. And a lot of the people that I work with, right, we've already, just spoke to a gentleman today, and he's like, how are we doing? I said, you know what? Everything we've done. He goes, yeah, my account's up. I said, I know. And that's good news. We don't have to micro tweak it every month, every 3 months, every 6 months. We do need to watch. We need to have a plan and a strategy. And I think right now, this was encouraging news. However, this is the area that we have a red line, which just tells me, hey, everything I just said, the indicators, the three wise men. So we have the RSI, which is the relative strength index. We have moving average, right, which is telling us the direction that it's going, and the MACD, moving average convergence divergence, which is the momentum technical indicator. So basically, in English, what does that mean? The speed as to which things are going. So when we get three signals that turn this, the signals that we got is that, hey, listen, this is downward pressure. This crossover, the short term crossover, the longer term. I'm sorry, I got that backwards. The longer term crossed over the shorter term, and that will put downward pressure. And then we have momentum. So think of momentum like I was thinking of, what analogy would I use there? And it's water, right? So if we're at the beach, right, it's that push, and it comes in, it's like a wave, it comes up on the beach, and then it pulls back. So it's not only is it just the momentum, but sort of directional as well. So is it shifting or whatever? But like in a hurricane, when you have a surge, right? And that's what they were saying is, hey, listen, this is an oversold or overbought indicator. That coupled with the other two indicators have signaled that although the markets are looking healthy right now, there's still some underlying concern that it could flip. Now, we could see a green signal turn around and go on, and that will mean, hey, listen, we could start to continue to see upward trends. But the chart in as itself, this is just going back to 2020. But if you go back to 1900s, early 1900s, when the S&P was first being measured, it is an upward trend. And some of these short-term pressures are really blips in the overall scale and size of the equity. So, it's just be aware. This is why we do these calls to make sure that as we're looking at the marketplace, is there any indicators telling us, hey, be careful, bellwether or some type of signal that we should be paying attention to? Now on to income, right? So the bond portfolios. And again, 1 month, everything was above zero, all good news. And this makes sense because the Fed has raised interest rates to a point to sort of offset inflation. As we look at the year, this is actually, if you're on an income-based salary, right, you're starting to see that a lot of the underlying income generating portfolios are healthy right now. Everything except the gold. The gold is, and notice during the year, there was a shift away from the gold line, which is treasuries, 20-year treasuries. And again, that makes sense, but notice that in September, there was a flight to safety. That's where people, when they get spooked by the markets, where they will go. And so that just tells me, again, it can be a contrarian indicator. It can basically say, hey, listen, when all the public is moving into these arenas, right? Are they right or are they wrong? But it's just I look at this as a whole, I'm going, hey, the top one is again, high yield, right? Muni bonds, right? So as we look at that and we go, it's okay, right? High yield, people are looking for high yield, and maybe they're doing so too, just because they were in such low interest or low yielding environments for the last year that they're trying to take a little bit more risk to eke out that little bit of return. But the next one down is the purple. That's investment grade bonds. So again, I think overall the bond market, both especially the United States, but even a little bit of globally, is looking a little better. And so for right now, that sort of supports why we have a green line in our indicator. So it's just, I think right now, until we get through the end of this year, and we turn the corner into 2025, I think right now there's not a lot of cause for concern, bar some global event or some match igniting some hotspot. I think overall, everything that you hear on a day-to-day thing is not really the markets go up and go down. But overall, I think most clients should be seeing some type of growth in their portfolio overall. So that was I know it was a short call today. The market updates typically are, but I just this is just as me sitting as and evaluating all the information that I hear both from our investment advisory firm, other advisors, and the news. I'm comfortable in right now where we are, bar something drastic. This is the area last month we were just over the 60. It's a recession probability analytics. We are over 50. And again, it's not anything, it's dropped a little bit from last month. So it's just, again, watch. If something, appears to be completely out of the ordinary, reach out to us. Let us know, ask for my thoughts. But again, I don't think I see or hear anything where the sky is falling. We want to be below 50, obviously, but right now, with inflation, and I think those pressures, I think maybe you might see some layoffs coming. But everything, the news seems to be genuinely good and positive. So I'm happy to share that with you. The last thing is I think Caitlin may have put into chat a registration link for the Social Security event. So next Saturday, not this Saturday, but next Saturday will be one of the last two Social Security events that we're doing at Rutgers. We'll be in the South Building, over there to the right. Starts at 9 o'clock. Make sure if you do want to come and register, if you're online, you want to do so. Please, seating is limited, so you do need to register. And I do expect a full venue. So if you want to take advantage of it, come learn about Social Security. It is a complex arena, and everybody's circumstances are different. Happy to share with you some insider secrets, and again, you can't learn less. So I want to thank everybody for taking time out of your day. Mike, Harold, great to see you both. And then anybody has any questions, reach out. Have a great day.